welcome to tonight's class on the beginning investments, right? On the basics of beginning investments here. So get right into it and just kind of talk about it here. Okay, beginner stock market class. So, oftentimes you guys know that I talk a lot about investing. And so, this is something that's really not taught in our particular culture in itself. But it's a very important for us to understand at least the basics when it comes to stock market investing. It can be very complicated because there's a lot of information that's out on the internet, YouTube, stock options, which is very risky, things of that nature. We don't necessarily teach that. I understand and know how to do it. But my platform is based on the long term education base and help you guys have long term wealth in itself. Trading stock options can give you income, but I'm a big proponent of asset building, help you guys understand how to build generational wealth. All right. So let's get right into it here. Why do we invest? All right. The reason why we invest is we want to get to the point here where we allow our money to make money for us. All right. That's the most important thing and the main reason why most people invest. All right. We want to be able just to have our money working for us, whether it's in the stock market, whether it's in real estate, whether it's in business, any type of investment is something like a down deposit that you don't necessarily expect a return now, but you're expecting a return for it to be in sometime in the future. That's what an investment is. And oftentimes what happens is when we get to investing, I think why a lot of people don't necessarily understand investing or don't necessarily have the patience is because when we make that down deposit towards something that we buy, we want to see an immediate return. And oftentimes those immediate returns don't necessarily come. Let's say, for instance, when you buy a real estate property, if you want to get into real estate investing, oftentimes you may get some cash flow, but you don't see that immediate return on your investment. Same way with the stock market in itself. We may buy some Apple stock and we want to see that stock go up as soon as we buy it, but it just don't necessarily work in that regard here. So why do we invest? Is we're looking at a down deposit towards our future, and we want to be able to see that that investment continues to compound and compound and compound over time. All right, that's what investing is. That's why we invest, and that's one of the main reasons why you guys are here with me in Let's Win Financial Community, because you guys understand that I'm very passionate about this here. And so when your teacher's passionate, then you become part of the process of the growth as well and the learning. All right. Now, what is a stock? So we talk about stocks a lot, but what is a stock? So I have a picture here of a whole piece of a pizza. All right. So a stock, guys, all it is just ownership. All right. Ownership of a company. All right. Ownership of a company. So now by you buying a share of stock, you now have access to ownership of this particular company. Now, when we go right here and we look at the next slide right here, this piece of here represents a whole company, as you see right here. So this whole piece of right here represents, let's say for instance, it represents Apple stock. And then you take the slice of pizza right here, this represents that you're actually buying some ownership into the whole slice of this particular pizza right here, but you're buying a stock in this particular company right here. This is what a stock is. All right. And the value of this one particular pizza, slice of pizza right here, or stock in this particular case, it fluctuates up and down based on this company's performance. So if we was to go buy Apple stock in itself, that stock is going to be dependent on how Apple sales, how Apple performance is going. And so that's why we go and we look at this here, right? So one other thing here, right, when we go and look at Apple stock in particular, right, we want to be able to be looking at this particular sector right here as well. What is a share price? All right. We're going to say, what is a share price? So when we go right over here, and then we're also going to look at what is a stock symbol. All right. So I'm going to go back over here. Let me just share this here with you really quick here. All right. We're going to go right over here and boom, we're going to go right here. Okay. Now, we was looking at the slide right here. It says, what is a share price? So when we go and we look at a share price, I want to share this here with you guys here really quick. You see, this is Apple right here. AAPLE. All right. Now, the second slide, let me jump to myself here really quick. The second statement right here says, what is a stock symbol? So, guys, how you identify a company? Each company is going to have a stock symbol right next to it. So, Apple stock symbol is AAPL. If you was to go and buy Tesla right about now, if you want to buy it, it would be TSLA. And later on here in a few minutes, we're going to go into Fidelity, and I'm going to go and show you guys how to go and buy any stock for any dollar amount that you want. But when we go right here, the question was right here, the first question was, is this right here, what is a share price? So if you look at Apple right here, their share price right here at the close, you see right here, January 31st on Friday, their share price is $236. So this is the value. This is the value of that particular slice of pizza, right? That you're buying, that stock that you're buying. So Apple in itself right here is the actual whole slice of the pizza. So for the ones that just joined in, I'm gonna take it back. One more right here. We're talking about what is a stock. So if we're buying this right here, right? If we're looking at and comparing this to Apple stock, the whole pizza right here is the Apple stock. But the Apple company. I'm sorry, it's the Apple company. But if we're buying this slice of pizza right here, this right here is considered a stock because now we're going to have ownership, a part of this overall company here. All right. So when we go right here and we look, Apple share price is $236. So any company that you look up, it's always going to have some type of share price. Now, the reason why you see this number over here, that right here will be if Apple stock, or let's say for instance, if the stock market was open, here's where Apple stock will be at as of today. All right. Now, guys, let me share here with you. The stock market works the same way as when you go to the store. Store has operating hours. So I want you guys to write this down here. The stock market is open Monday through Friday. It's open Monday through Friday. And the hours that it's open, I want you guys to write this down. The stock market opens to where now, if you wanted to buy a stock or a fraction of a share of a stock, the stock market opens up at 9 o'clock a.m. Eastern Standard Time. I want you to write that down. It opens up at 9 a.m. Eastern Standard Time. And it closes at 4:30 p.m. Eastern Standard Time. So between 9 a.m. and 4:30 p.m., you can go and you can log into your Fidelity accounts or your Robinhood's accounts, right? And now you can go and buy any of these companies that we talk about for any dollar amount that you want. That's the most important thing right here, guys. From 9:30 to 4:30 p.m., you can go and buy any of these companies at any dollar amount that you want to. Now, let me just tell you how easy or easier investing has gotten before when I first started investing over about 14 years ago. When you used to have to invest back in the day, you had to pay a commission. A commission is you had to pay about $7 just to buy a company stock. And you also had to buy it by the whole share. So if I wanted to buy Apple stock 14 years ago, I would have had to pay $7 as a commission to the company that's offering the sale of the stock. and I would have to buy the stock for $236. The investing world has changed. There's no more commissions, and now you can buy any company at any dollar amount that you want. $5, $10, $15. And we're going to go on Fidelity, and we're going to show you how you can go and buy these companies here. So we're going to get back on task here. I'm going to be closing up here shortly here. But I want to go ahead here and break this down here to you a little bit more here, right? So the piece right here represents the whole company. If you buy a slice of this piece right here, it represents the stock. This value of this particular piece or the stock will fluctuate depending on how that company performs. So, what is a share price? A share price is a value, a number that each particular company stock is issued. All right. So, if you don't mind, if you can mute, and I'm trying to mute everybody here. If you don't mind, just make sure you mute your phones here. All right, we muted. Okay, so a share price is the value of what a company they has priced a company at. Okay, all right, we're gonna go look at some others here too. What is a stock symbol? A stock symbol is a symbol that's assigned to a particular company. So let's go and look at this right here really quick. All right, now. I get very, very excited when I see the Tesla Cybertruck. All right. And so, what is Tesla, right? We're going to go right here and we're going to type in TSLA. TSLA is right here. It's Tesla stock symbol. All right. So we're gonna go and look at this here really quick. So we're going right here and we see this is Tesla. This is Tesla stock symbol right here. TSLA. All right. Now, if you go right here and you look at the close, you will see that Tesla share price right here is $404.60. All right. You guys see that? That's their share price. This TSLA right here is their ticker symbol. All right. Let's go right here and let's look at another company. We're going to go over here and we're going to put in AMZN. All right. It's one of our favorite stores that we like to invest in, Amazon. So when we go right over here to Amazon, it's going to pull it up right here. We're going to see Amazon ticker symbol is AMZN. The ticker symbol is what gives the company their identity. Then we're going to go right here and look at the close. We see that Amazon share price is $237.68. All right. Now, these numbers over here represents, let me just share this here with you. This right here represents, as of Friday, Amazon stock price went up 1.30% for that particular day. All right. That means that stock went up $3.04 on Friday. So that means that it went up 1.30%. Now I'm gonna really dumb this down for you guys. I'm gonna really show something very powerful to you guys. There's a reason why we invest. And I'm gonna share something. If you're a parent on this particular phone call, I've shared this before here in the Let's Win Financial community. If you have young kids, not only should you do what we're teaching tonight, but we should also have this for our kids. And I'm gonna give you an example here. I'm gonna take this back right here to April of 2012, and I'm gonna show you guys something very powerful here. And we're gonna be looking at Apple. So Apple is gonna be our big example for tonight. All right. Apple iPhone came out in 2009. All right. But let's go and let's look at this here really quick. I'm going to go back and I'm going to show you where Apple stock was at in August of 2009. All right. And the reason why I'm sharing here with you guys of August 2012. So we go right here, we will see that Apple stock price here, August 2012. And let me share this here really quick. The reason why I'm sharing this right here is because very historic in my life, Leslie and I, we had our first son. He was born on August the 19th of 2012. So I said, I taught him a lesson the other day. I said, Avery, let's go and look at Apple stock and let's look at the share price. He understands the share price. You remember we talked about that's the value, what it gives that particular company. I said, Avery, let's go and look at the share price of Apple stock when you was born. So I'm getting ready to go share this here with you guys. We're gonna go right here and look at August the 19th of 2012. So you can literally go and do this right here on Yahoo Finance. You go to Yahoo Finance, you go over here, historical data, you go and put the company information in. Now, Avery was born here on August the 19th, but August the 19th was on a Sunday. So of 2012. But remember, the stock market is not open on the weekends. It's only open Monday through Friday from 9 a.m. to 4:30 p.m. But let's go right here and look at the close right here. So on August the 17th, that Friday, right? If you look at Apple close price, and we'll go down right here. Guys, this is powerful right here. August 17, 2012, Apple here, right? Their share price was $23.15 when he was born. When my oldest son was born, Apple's share price was $23.15. If you go right here and look at the close as of January 31st, Apple's share price on August 17, 2012 was at $23.15. And today, Apple's share price is $236 per share. So when we go and we look at this right here, and we look at the difference on this right here, August, you will see right here, August 2012, $23 here. I got that from Yahoo site. We just looked at that. The value of Apple stock today is $236. If you look at the percentage difference between $23.76 and $236, you will see that this is a difference right here of 926%. This is powerful, guys, because when we go and we buy these iPhones, we go and buy these AirPods, we go and buy the MacBooks, we go and buy the Apple Watches. But Apple stock, as you will see right here, the $236 is the cheapest Apple product that you could buy, and it's the most valuable investment that you would make into Apple. I'm going to repeat that again. Apple stock right here is the cheapest Apple product that you could buy at $236, but it's the most valuable company, or it's the most valuable commodity of Apple that you could buy. Because if you would look from 2012 to today, that's a 926% difference here. So when we go back and we look at this here, right? Let's go back and even look at this right here and play with this here, right? So we see that this is Apple. This is their stock symbol. If we go back here, we can play with these dates right here. And so when we go back here and we look at COVID, it's crazy, guys. COVID was just 5 years ago. So let's go right here and look at 2020 in March of 2020. All right, March 2020 is when COVID happened. So we're going to take March the 1st. All right, and then we're going to put our end date right here. And we're going to take this right over here to 2020 on the end date. All right, we can go March, and then we're going to go right here to the end of March. Okay, then I'm going to hit March the 1st, 2020 through the end of March 2020. When I hit done here, what's going to do is it's going to give me Apple share price in March. All right. I think I probably need to go ahead and hit a refresh here because this information is supposed to generate right here. All right. I don't know if my computer's a little slow, but I wanted to show you during COVID. It's got to wait on it here. Let me see here. I don't want to wait. All right. It's letting me down here a little bit. I've had it up for a while, but I want to show you where Apple share price was at during COVID. All right. Now, while I pull this up here, I want to pause right here based on the information that I've shared. Does anyone have any questions so far? Any questions on anything I've shared so far? Nope. Okay. All right. So we're going to continue to keep pressing along here and along with the presentation, and then we'll come back and we'll get some more questions here. All right. Okay. So we're going to go back here to the PowerPoint slide, pull that up for you guys. And then we just got a few more slides and then we're going to be done. All right. Okay. Now, here's another thing. We also can buy a stock, but then we can also buy what we call is a ETF, which is exchange traded fund. So instead of buying a stock, now we can go and buy an ETF, which is a collection of companies. And guys, if you go and look in your investment portfolio that I have for you, you have VOO in your portfolio. We like VOO because now you're buying one share, but now you're buying 500 stocks. You're buying 500 companies in VOO. So I like to use this analogy right here. I want you guys to take a screenshot of this right here. I like to use this analogy. If you was going to war and you was going to fight a battle and you had one person, if this one person right here died, then the war would be over. If you had 500 soldiers fighting for you and say 100 of those soldiers would have died, you still got 400 soldiers fighting for you. So when you go and look at an ETF, you will see right here it's more diversified, right? It's decent returns, but it's a lower risk. All right. It's a lower risk because if Apple stock go down, then you got 499 other companies in here. You can evaluate their performance. They may not have went down. So we buy ETFs as well. That's one way that you can invest and you can have less risk because the more companies that you have, the less risk that you will have here. All right. Now, it's the same way if you go to McDonald's. If McDonald's only sold beef hamburgers and then something went wrong with cows over in Europe, then McDonald's out of business. But if McDonald's now sell hamburgers, they sell French fries, they sell ice cream, they sell fish. They got a bunch of stuff on their menu. So even if the beef went down in Europe, they still could sell the ice cream. They still could sell the fish. They still could sell the slushies. They could still, because now they're more diversified. It's a less risk to the company. So you will see in your investments, you will see that you have ETFs inside of it because what that does is if I'm helping you and I'm giving you a portfolio, it has lower risk. All right. Does everybody understand that? Any questions right here on an ETF? Any questions? All right. So let's go and look at this right here. These are the Apple returns. So if you go and you look in 2023, Apple stock was up 49%. What does that mean? So if it was $100 and it went up 49%, that means that now instead of Apple stock being $100, Apple stock now went up 49%. So you would go back right here and you will look the average return of Apple here in the last 21 years. It's been up 50%. And guys, we own a bunch of Apple products. When I say we, I am not talking about me. I'm talking about everybody on this particular session tonight. Your family, their cousins, their nephews. I mean, guys, we just own this product. But we can also no. We don't own this product. Let me rephrase this here. We have these products. I want you guys to understand this right here. We don't own these products. We have these products. Now, if you invest inside of your portfolio and you have Apple stock, or if you have VOO, then you own Apple. Understand that. But if you don't have VOO or you don't have Apple stock, then you only just have the Apple product. You don't own it. I want you guys to understand that. All right. So these are the Apple returns. So, I mean, guys, even dating back to 2023 right here, right? Let's look at over this is a 21 year time period. Apple stock, if you see right here in the red, it's only been down one, two, three. It's only been down 4 times, which is not a lot. So this is one of the reasons why Apple here is the most valuable company in the world, and we're going to look at that in a minute. But here is your Apple returns. You guys can take a screenshot of this here with your phone so you can just kind of see how much. Look at this here, guys. Look at 2020. Let's go to 2020. You doing COVID, you can't go nowhere. And guess what you was doing during COVID? You was on your Apple iPhone. You was on your AirPods. You was on that MacBook. And look what Apple stock was up. It was up 82.31%. Then the following year in 2021, we still navigating through COVID. It was up 34.65. Then we get right here to 2022 after the government don't issue all the stimulus money to Americans, right? Then boom, 2022 inflation hit. Then everything was down during inflation. Then we learned out free money ain't free money. You understand that? So take a screenshot of this right here and you will see the Apple returns. All right. Okay. Now, this is I got two more slides here. Whenever I say the S&P 500, guys, or whenever I say the stock market, this is what I'm referring to. I want you guys to take a picture of this with your phones as well. Take a screenshot of this here. Whenever I say the stock market, I am referring to the S&P 500 index. The VU fund right here that you have in your portfolio, this is the stock market. Because the S&P 500, all it is 500 of the largest companies in the US. And the S&P 500 has 11 sectors. I don't care what company that you buy, what stock that you buy, it's going to belong in one of these 11 different sectors here. Consumer discretionary, that's an example, like Amazon, Tesla. If you go to Ross, you go to TJ Maxx, it belongs into this consumer discretionary. Information technology here. You see Apple, you see Microsoft. Any IT company is going to belong in this information technology sector. Communication services here, right? You will see this is the sign right here of Meta. This is Facebook. This is Google. You look at Comcast. You look at AT&T. They all belong in the communication sector. The consumer staple, Coca-Cola, Walmart, real estate, utilities, healthcare, Johnson Johnson, PVP Pfizer, energy, industrials. You will see CAT. You will see 3M. The financials, those are your banks. Bank of America, Wells Fargo, your materials. So when we buy the VU fund, we're not just buying one company. We're buying 500 companies. And not only are we buying 500 companies, but it's very broad and it's very diverse because it's spread out between all these 11 different industries right here. So when they say this is the stock market, that's why we refer to that because it's very broad and it's very diverse. So when we go right here and you look at the S&P 500, you can go on to any financial website. All right. You can go onto any financial website. So if we go right over here and let's say, for instance, here, let me go back over here to CNBC site. All right. So we go back into CNBC. You're going to see in any major headline for any particular company that we're invested in, right? You see this S&P right here, this S&P 500. Boom. You go back over here. That's your top 500 companies right here, spread across 11 different industries. All right. I want you guys to screenshot this because when Sherwin say the stock market is up, the stock market is down, it is based on the top 500 companies spread across these 11 different industries right here. All right. This is very important. The S&P 500. So let me just give you guys a little warning right here as well while we sit here talking about it. Over the weekend, guys, and let me just tell you, we're going into some very turbulent times now because we understand who our president is now. So the stock market is going to get a little volatile. So not to scare you, but I'm giving you a warning. Buckle up this week. Buckle up. I'm gonna tell you why. Because President Trump issued tariffs. Tariffs is taxes. That's all that is. When they say tariffs, when you hear tariffs in the news, they just mean taxes. He put taxes on Canada and Mexico. And he put 25% tariffs on Canada and Mexico. Here's why the market, when I say buckle up. Because now what happens is if you look at Canada and Mexico, if they're providing products and they're importing them into the US, that means that these companies now are going to have to pay 25% more just to bring their products for sale over in the US. So what's going to happen is these companies, right, that's bringing this information or this services over here to the US, like Canada and Mexico, they're going to have to pay 25% more. These companies that still relying on Canada and Mexico products here in the US, they're going to be receiving this here. And then these companies that's buying it, they're going to have to pay more money to Canada and Mexico. And what's going to happen is because they got to pay more money, guess what? That's going to be passed down to the consumer, me and you. So that means that inflation is going to go up. For the prices of goods and services, if it goes up, that means inflation goes up. And what happens is when inflation goes up, it's not good. So that's why I tell you to buckle up because the market, the S&P 500, don't necessarily like tariffs. They don't like taxes. But Trump wants to be very hard on these companies because he feel like they don't pay enough in taxes. So we got an incoming president that is off the cuff, say anything. We just want to buckle up. All right. There's no reason to fear. There's there's no reason to fear anything like that. But just giving you some information on that. All right. So we're gonna see some buying opportunities this week. When I say buying opportunities, Kenyatta, that means that $200 pair of Jordan shoes that you're buying for your grandchild, right? If they go on sale for $120, we buy it. The same way for that Apple stock. If it's $236 today, and if it goes down to $215 to $200 per share, that's a buying opportunity. All right. So I'll show you my last slide here, and then we're all done for the night because I did not want to do information overload here. All right. So if you did not take a picture of here of the S&P 500 and screenshot, I want you to go ahead and do that. All right. Our last slide here for tonight, the QQQ. I talk about that a lot. That's another index fund, or like what we like to call another ETF. We call it ETF is multiple companies, right? So ETFs here, right? This QQQ, it has 100 technology companies inside of it. It has 100 technology companies inside of it. You see these companies that's inside of it. NVIDIA, Facebook, Broadcom, which is an artificial intelligence company, Google, Tesla. So instead of just buying one company, now we can go and buy a QQQ, which is 100 companies. But not only is it 100 companies, it's 100 technology companies. And I'm going to show you how much QQQ has risen over time. All right. But I want you guys to screenshot this on your phone so you can understand. Well, I see QQQ inside of my Fidelity, but what does it really mean? It's 100 technology companies inside of one basket here. So when we go right here, and let's look at the performance of QQQ really quick, right? So I'm gonna go right over here, and all I'm gonna do is I'm gonna go to Google, and you guys can do this right here. Anytime you got it, you want to see something, right? You go right here and put in QQQ, put in Google, and all it's gonna do is gonna pull it up. It's called Invesco QQQ. But check this guy, guys, right? You see over a 1 day period, QQQ was down, but check this out. Let's go and look at a 5 year period. Over the last 5 years, guys, QQQ has been up 138% over the last 5 years. Now, if you understand how to do math, you take 5 into 138, and if anybody's adding up the numbers from home, guys, we're looking at easily what 5 into 38. I got to do my math on that here. Let me pull up my calculator here so you guys will be able to understand how much this particular ETF has been returning over time here. I tell you 138 right here, and I divide that by 5. Guys, this one fund right here, this QQQ index has been averaging 27.6% per year over the last 5 years. And the reason why is because it's all technology. Technology, guys, runs our world. It runs America in itself. So it's very important, and we understand these ETFs instead of maybe just buying Facebook. Now we can go and buy QQQ, and not only do you own Facebook, but you own Amazon and 98 other technology companies. That's very, very important here. Okay, any questions here? I want to pause right here. I want to take some questions. I'm gonna log in here. I'm gonna show you guys something else here really quick, and then we're gonna be done here. But I want to take some questions here. Let's take a few questions.
Sherwin, this is
Yep.
Ron.
Mr. Copeland, how's it going, sir?
I'm doing well, and yourself?
I'm doing well.
Question. Well, I guess maybe an observation. No, question, I guess. What's the difference between a mutual fund and an ETF?
Oh man, that's a great question, Mr. Copeland. So let me explain that to you guys. Repeat your question here, Mr. Copeland. I want to make sure everybody understood that.
The difference between an ETF and a mutual fund.
Okay. So I'm gonna explain this here. I'm gonna share my screen. I want to share this here with you guys here really quick. All right. Let me log into my account and I'm gonna explain this here. A mutual fund, guys, is the same thing as a ETF per se, right? But remember, I told you the stock market is open from 9 a.m. to 4:30 p.m. A mutual fund, when you log in, if you buy a mutual fund, you won't see its performance during while the market is open. But a index or ETF, you will see that the S&P 500 fund, you will see it go up and down throughout the day. So, Mr. Copeland, a mutual fund, the fees are higher, is professionally managed by a group of investors that's actively investing. So if you got a basket of companies inside this mutual fund, you got these professional managers, they're buying companies, they're taking them out. Whereas an index or ETF is very passive. You don't have those professionally managed managers
Hmm.
like constantly buying them in and out, but a index is a little bit different. So let me share this. Let me share this here. I'm gonna share my screen here. Um, so I am going to. I'm gonna show you an example of what a mutual fund is, and I'm gonna show you an example of what a index fund is. All right, and we're gonna look at an S&P 500. All right, so I'm gonna go right here. That's a very very great question here by Mr. Copeland here. All right. So, guys, you see this FXAIX? That right there is a mutual fund. That's another way how you know what a mutual fund is because normally it has four plus symbols. So this Fidelity Index Fund right here, right? That's a mutual fund. All right. And what happens is, Mr. Copeland, if you got this in your portfolio and you log into your Fidelity between 9:30, I mean between 9 o'clock a.m. and 4:30 p.m. or 9:30 to 4 o'clock p.m., you're not gonna see the performance on this. This is what the share price is on it. But check this out. You can go and buy the same fund, VOO, and this right here is also a S&P 500 fund. But this one here is going to trade like a stock, but we know that the VOO, it's an index fund. All right. Let me go up here and just put it in here. VOO. All right. Boom. It's coming up here. All right. VOO. So it's the same exact thing as it's the same family, S&P 500. But Mr. Copeland, a mutual fund trades after the market closes. Whereas this fund right here, the same S&P 500 fund here, it trades throughout the day. All
Hmm.
right. Did I answer your question? I don't want to go above you here. I want to make sure I break it down to you.
No, that was a good answer because the main thing was that it is professionally managed by a group.
Yes. And it's going to
That's,
cost you a little bit more because it's
yeah,
professionally managed by a group.
good answer.
Now, Mr. Copeland, you realize you don't have that FXAIX in your portfolio. In your portfolio, you have VOO.
Definitely.
Yes, sir. And you also have QQQ. Now, as a summary, Mr. Copeland, what did we say QQQ was? I'm always going to pick on you for a little bit.
We know that's an ETF, right?
Correct. That's
Exchange.
ETF. That is correct.
Hmm.
All
Hmm.
right.
And
Good job.